Hi there, this is Daniel Goott from Investec Wealth Strategies with an April 2016 update. In this video, we're going to talk about some of the economic events that influence markets in this past month and give you some insight into what they could mean for you as an investor. After several rocky months for financial markets, March turned out several straight weeks of gains, giving investors hope for the spring. After months of strength, the US dollar weakened against other currencies. A strong dollar makes domestic goods more expensive to foreign buyers, which has hurt corporate profits here in the United States. A comparatively weaker dollar will help make US products more competitive on the global market, which we hope will be reflected in international demand for our goods. Last month was also important for central bank policies. The European Central Bank, Bank of Japan, and the Federal Reserve here in the States all held meetings to determine monetary policy. In recent years, there has been a divide between the Fed, which is moving away from ultra-low rates, and European and Japanese central banks, which are fighting slow economies with negative rates and quantitative easing. However, discussions at the March Fed meeting show that U.S. economists are also becoming more concerned about growth. During the March meeting, the Fed voted to hold rates steady and indicated that officials are planning for a slower pace of rate hikes this year. Remarks after the meeting show that Fed economists are divided. Some officials want to start raising rates, while others favor a wait-and-see approach. However, Fed Chair Janet Yellen has been clear about her intention to remain cautious in the face of global risks. We also got some good economic news last month. The final estimate of fourth quarter economic growth showed that gross domestic product grew at an annual rate of 1.4% instead of the projected 1%. Much of the improvement came from stronger than expected consumer spending, which is great news for the economy. The labor market also continued to add jobs in March, which supports further spending. On the other hand, the increased spending at the end of 2015 may have come at the expense of growth in the first quarter of 2016. Consumer spending data from January was revised lower, causing Q1 GDP forecasts to plummet. Looking ahead, we'll be awaiting reports from the first quarter that ended in March to see whether the numbers support or weaken concerns about growth this year. We're not the only ones who will be closely monitoring the data. We know that the Fed will be watching ahead of its April meeting to see whether the economy can support additional rate increases. Will they raise interest rates in April? It's hard to say, but it's not likely. Currently, most economists predict a June 2016 interest rate hike, but there's always room for a surprise if the data looks good. That's it for the April update. As always, if you have any questions or concerns about what we've discussed, please give our office a call at 713-622-9111. In addition, before we let you go, we wanted to let you know of our upcoming Shred Day event that we are hosting at our office on Saturday, May 21st from 9 to 11 a.m. We invite you to bring any old papers that you would like to have shredded on site. We'll have coffee and pastries as well, and invite you to bring your friends and family. Once again, this is Daniel Goott with the Investec Wealth Strategies, signing off with the April update. Thank you very much.